I'm in the hotel business in Turkey, and usually the price, landowners asking price and the payment is really high because land has always been a traditional trusted asset in Turkey for investment, and that's the main reason actually why the prices are really high when you compare to the developed countries in the world. But if the funds, when you look at the yields from the cash flow of the operational cash flow, it may be really low. But when you look at the residue value, when you're exiting a project, there's an increase, tremendous increase in the prices. Retail right now is 6% increase during the economic downturn, and it's a constant increase, and it's going to be increasing soon. And with these old urban, Istanbul has just started this huge urban regeneration step. And there's going to be big changes in Istanbul, new cities being planned. So if investors, it could be hard for institutional investors, but if they can look at the Istanbul area or Ankara area or other developing parts and try to find good locations that will do a lot of increase in the price and consider the residue value after 10 years, then the risk appetite may be looked at in a different perspective because there's a huge value that can be earned over there.
I totally agree, but you've touched on a very important point. It's how much do you know about the city, about the culture, about you have to be very acquainted with what's happening within the environment. So when you talk to institutional investors, most of the time they do come on a short trip period, 2 or 3 days. So for them to actually get the full understanding of the country, just Istanbul to start with is complex in 2 or 3 days. So not to say the whole country. So again, it will come with more transaction, more transparency, and more information being brought to them. But again, like you said, price appreciation of the land, of the asset, these are factors that they can take into consideration, but once they truly believe that this is the place to invest.